This is Spooman for Risk International, RSKsys.com. You can reach us on the web and contact us with any questions about our system, our Emini trading system, and of course anything that we may be posting here on YouTube. The purpose of our video today is to examine the relationship between the VIX and the ES on August the 10th. Time frames shown in this video are Central Standard Time. You can go to our website and check on the subject of divergence, where we will provide written information on the methodology we used for tracking divergence. But a few general principles need to be understood first of all. The VIX moves in an inverse relationship to the Spoos. So, if the VIX is moving down, the Spoos are moving up. And if the VIX is moving up, the Spoos are moving down. Now, how can we use that information along with a simple Detrended Price Oscillator as an indicator to determine when meaningful changes in market direction will take place? Now, we are coloring the bars of this 7-tick VIX chart so that we can determine the trend direction of the MACD. Now, we place actually a series of MACDs using our group reversal system onto this chart, but we won't go into that. Just suffice to say that we know what direction the MACD is heading by the color of these bars. And as the VIX is moving down, okay, when the color of the bar is green, okay, when the color of the bar is green, it actually means that there is weakness in the direction, and that likely a pivot will take place, causing the VIX to move up. We see it here, we see it here, here, and here, and here. Now, what's more interesting, though, is what the DPO is doing. As we're hitting new lows on the VIX, here, for example, we see a corresponding new low on the DPO. A little bit later, we have another new low on the VIX and a corresponding new low on the DPO. But here and here, notice what's happening. The VIX is hitting new lows, but the DPO is not. We're hitting higher lows on the DPO. Now, the other rule that we apply to all of this is what is happening with regard to the Spoos. What's happening with regard to the ES, the Emini S&P 500. If, when we are hitting new highs on the ES and we're hitting new lows on the VIX and the DPO is divergent, we can expect at least the probability, the high probability, of a meaningful change in direction in the market. Now, what does that mean and translate into? When we started to see new lows on the VIX, but divergence on the DPO, if we're hitting new highs on the Spoos, we're looking to take a short trade. That short trade ultimately comes to fruition about 10:06. Let's get that up here. 10:05, 10:06 on the 10th in Central Standard Time. It was as plain as the nose on your face by simply looking at the DPO. Now, as the VIX is moving up once again, we're basically applying the same principle that we used in the past to determine divergence, except we're doing it as it's going up. So as we get into new highs on the VIX relative to when the trend change began here, we start to track the DPO. The first time we get a yellow bar, which indicates weakness to the move on the upside, possible move down, is right here. At that time, we're getting, roughly speaking, new highs on the DPO. Then it goes a little bit higher here. Again, we have new highs. We get another yellow bar here. Now we're already divergent. We're already divergent on the DPO. But as we go higher, ultimately here, this high compared to this high is no longer divergent. Nevertheless, we do get a move, a retracement down, and then the VIX begins to move up one more time. So when we hit new highs here, again we're seeing some evidence of divergence, but it's really better tracked from over here, from this move. And in that respect, it is not divergent. Finally, when we get right up here and begin to turn, while you can't really see it that well, there is a little bit of divergence in here. And we see a corresponding move down, at least briefly. And finally, as we get our last move up, and let me just change the resolution there a bit. We get into new highs on the VIX once again, and when we compare the previous high to the new high, and we'll move this over a little bit, well, you can't quite see what the DPO is. I can't quite bring that onto the screen. But right here the DPO value is 0.1714, and here it's 0.1686. The DPO is divergent. So the question is, are we hitting new lows on the Spoos at the same time we're hitting new highs on the VIX? Because if we are, we're divergent, and that indicates a very good time to take a long trade. Now let's take a look at these two particular times of divergence, one at about 10:06 and the other at 13:21 on the 10th. We're going to examine what happened with one of our other charts that's tracking the results of this calculation.